pick one thing, each of you pick one thing you think that is realistically could change that would lead to a more robust recovery. Bill?
I think probably the thing have the greatest pessimism on that could turn out to be not reality is the housing sector. I think that we've been beaten down so long that in fact if all of a sudden the value proposition with rents rising makes home ownership a better opportunity, we have seen a very significant shift over the last number of years of households not being formed. So there's great pent-up demand of new households coming in, and if that comes back sooner than what I'm thinking, that could be a very good boost for a lot of activity. As Kristine mentioned, trucking plays a major role with regard to building homes. Every house, I believe, is something like 20 truckloads of material gets delivered.
Okay. Kristine?
Does it work? Okay. I think it's the rest of the globe for me. It's probably the unknown in terms of Europe and Brazil, India, China, and the decoupling of the U.S. I think that what we've seen. Clearly, these governments are not going to sit back and idle, and there's going to be a rush to fix things and devalue their currencies and to drive. We're already seeing movements by China. I think there's a big doomsday out there in terms of what sitting in Wall Street, and I think somewhere it probably will not be as bad as we all think it's going to be. And in that case, like I said, the U.S. I think that the most underplayed headline out there is that the energy boom in the United States is very real.
Okay, thanks.
Okay, great, thanks. The first question, I guess this would be for either Bill or Kristine. How large an effect do you think the Iran sanctions will be the impact on diesel costs in the near future?
Well, I would think that we have already been seeing a lot of risk premia put on there, yet at the same time we've seen the pricing come down, which suggests to me that it's a lot of the weakness that we're seeing all around the world is bringing that down. It's not, I don't think the risks have come off of that play. So I think that right now it's just the global weakness that's bringing prices down. I think it still remains probably a good $15, $20 premium is what I hear estimates are.
I agree.
Okay, and on the same topic of oil prices, do you think the proposed legislation prohibiting commodity speculators from driving up oil prices, unless specifically involved with oil, will have an impact on oil prices overall?
I mean, we've thought about some of these issues, and quite often you look at, if there's in fact speculation, the question is where is all the inventory being held, and it's hard to find that inventory. So, there's a lot of good things that people participating in the markets do with regard to adding liquidity into the market, but nonetheless, we do hear from a number of financial players talking about how speculators are rigging the game and adding up to these prices quite a bit. But again, I'm not sure I'm convinced of that.
I have a question. I'd like to get each of your views on the current administration's handling of the economy and your projections for change through the next election.
Well, that's easy. I'm not going to comment. Sorry.
Kristine, I think that's all yours.
I clearly think that the economy has been held back, whether the regulatory environment, and in terms of just the deficit, it's been the nature has been a great topic here would be I look at the highway bill. I think it's a positive. It's an infrastructure piece for America, and it's something we haven't had. We haven't raised the gas tax, I shouldn't say, since 1993, but we've had a series of continuing resolutions, and I think that everybody collectively in DC would see this get passed, but we can't get it passed, and it would be a good thing for everybody that we get that bill done. So in the nature of, I think that nothing is getting done. While it's keeping wild legislation off the table, it's clearly not a good thing for U.S. business.
One more, and this is for Kristine. Many OEM truck and related stocks are at 6 to 12 month lows. Which are good picks and why?
I have the group neutral rated at this point. So I actually, in terms of my one buy rating, would be actually on the trailer side, Wabash National.
I want to come back to the global situation because it seems like in the comments, especially from Bill, that that's where the big risk is and where the big weakness, and Kristine alluded to that. Is there any role the United States government or the United States society, I guess, can play in easing what's going on in Europe and China? Is there anything that is within American control to either make the impact of what's going on less on the domestic industry, or even, frankly, to help those economies stave off, recession?
Well, I'll just comment that I think the European problems are largely Europe's to be dealt with, and the Fed has stepped in terms of offering some dollar liquidity measurements with some central bank swaps. That if you look at one of the last charts I put up there in terms of special products, it was that purple area. Especially during last fall and winter when we saw the concerns about Greece. There was a little bit of shortage of dollar liquidity, so we provided some additional liquidity there. But outside of, with regard to the risks of Europe, most of our banks here domestically have very little tie-ins with the sovereign debt problems that is happening. So it will largely be contained, in my opinion, within Europe. We'll see some minor impact on our export, but I think that's already been factored into with the outlook, and I think that's why this year's growth is viewed as being just around trend. I think that it's in part because of some weakness in Europe hurting our exporting ability. I think what more concerns me is if they mishandle their issues surrounding the debt problems, and if it is mishandled and creates a financial crisis, that's the kind of factor that would not respect the borders and would travel around the world very quickly and impact our markets, even with our little tie-in with regard to the sovereign debt of Europe.
Mm-hmm. Anything to add, Kristine?
I agree.
Do we have anything else? Okay.
Hello? No, okay. I wanted to ask about the U.S. It seems like we have the highest U.S. tax rate, corporate tax rate almost in the world anymore. And 60 Minutes were showing the other night about how many U.S. companies are going overseas because of the, Ireland and Switzerland. And, do you think we need to restructure our corporate tax rate and cut out the loopholes and restructure the whole thing to bring these companies back and make U.S. stronger? And a follow-up to that was, what's going to be the effect of this continual government spending and our debt getting out of control? How will that affect the economy?
Well, I can only comment on limited amounts on especially the first one. I mean, clearly you want to make sure that your country's tax policies are in line with other countries. Otherwise, you do have at risk that corporations will move and relocate just because of tax issues, which you shouldn't have happening. And ultimately, I remain very optimistic for the U.S. because of what the U.S. is all about, and we talked about the gas play and the low-cost energy that presents some great opportunities for us. With regard to, I'm sorry, the second part of the question was? Oh, the debt issues. Those we're very concerned about that. These are issues that are of a concern, but not over the next couple of years. These are not short-term issues, but ultimately, we need. These are issues that will weigh upon the U.S., and the longer we delay it, the more it will impact us. In fact, these are issues that are not even on a 10-year horizon. You have to look out 20, 30 years. And in fact, in testimony this winter, Chairman Bernanke highlighted that he thought that the Congress should be looking at a budgeting cycle that goes beyond 10 years. The 10-year cycle is just not long enough to really look at how we're dealing with some of these issues.
How does the investment community
I would comment on the tax piece that like I said, the coming fiscal cliff, and I mean, that's a shorter term question, but yes, it's very right. You know, simplification of the tax code and obviously lower rates or something, it would be very beneficial to the U.S. economy. You know, but I think that in the near term, you know, and I think people in your own businesses, you're making decisions. Again, it comes back to that uncertainty. What's going to happen with the election? What's going to happen after we move into 2013? You know, it depends who gets the White House. It depends the makeup of the Congress. And so I think that, you know, not only did we have bonus depreciation, 100% bonus depreciation pull activity into 2011, now we're seeing that uncertainty and we're facing a fiscal cliff. So from an industrial analyst perspective, that makes me a little very nervous.
Kristine, consistently I've been following the AAR data, and consistently we're seeing carloads down, intermodal up. Is that strictly a coal issue, or are there any other things in play?
Again, it goes back to the chart that I had up there. I mean, if you strip out ag and coal, but primarily coal is the major driver that's pressuring carloads at this point.
Any other questions from the audience? Let me close out and go back to Bill for one last comment. You showed us all the monetary policy, that last couple of slides that you showed, what we did in 29 through 33 versus what we've done in this cycle. If things go south globally, and if housing doesn't recover, and you know, if we run into some issues, is the Fed at the end of what it can do with monetary policy? Is there anything really at that point the Fed can do, or is it just going to have to be some other solution?
Well, many of our policymakers, including our president of the Chicago Fed, Charles Evans, has talked about the fact that if things weaken, we can continue to do more large-scale asset purchases. So the question is, you know, whether we're prepared to do that or not, that I can't comment upon. But there's a lot of discussion on both sides of that issue within the FOMC, which has been very intriguing, especially how that has changed under Bernanke leadership compared to Greenspan.
Okay. Well, we'll go ahead and take this one.
You mentioned that you would have the appetite for large-scale asset acquisition. What specifically would you acquire?
Well, we don't own every single Treasury security out there, but we have. But we also are holding a lot of mortgage-backed securities on our books, $1 trillion worth of those. So it depends upon what markets we want to affect and impact. And while interest rates are low, you know, they can go lower.
Okay, well, thank you, Bill and Kristine. And I believe that is it. Do you have any comments? Please join me in thanking both of them for their presentations today.